Hey guys, just a quick live execution video where I'll be covering the short that I took today on NQ. If you guys haven't yet, make sure you hit like and subscribe so you guys can see more of this series in the future. Let's get straight into it. So I'm going to start out with the week, what it's been doing, what kind of news we had. So right here was our new week opening gap, pretty large. And what this came from is Trump basically proposed a set tariff for 90 days with China, which was a decrease from 125 to 30%. Basically, we've been scared. We've been scared of a recession. And because of that, because we came up with a short term solution, and hopefully we hold on to that solution, we keep the rates the same so that we don't have any more recession issues, no more scares, whatever. I'd like it if just the Fed and Trump just came up with something, because that's why we're getting all this volatility, random spikes of news, just like choppy price action, just accumulation, and then it's just like a random move. So I've been really sitting on my hands, not doing anything too crazy. But let's look at some of this chart. So we had our new week opening gap. Obviously, London expanded right here. You can see Monday we retrace about to, let's measure this out. Yeah, so about the discount area of this London session. And then we kind of chop for a while, like pretty much all session. Let me see if we have the inversion right here. So we did have an inversion in here. Nothing too crazy. I didn't trade this day. However, I could see how this is like a decent trade. And the reason for that is, sorry, let me change color. So we have our 30-minute delivery. We took out sell side. We're at zero. We're in a discount of this London area. So if we're expanding during London, then there's a good chance we're going to expand through New York. We're going to respect that. We have quite a bit of highs, low resistance highs. Eventually they get ran in PM session. However, right here would have been your entry. Let's see where your stop would be. So preferably you enter during lunch. Stop at the low. Probably target this high. All right, that's a 3-to-1. Nothing too crazy. And then following day, we had Asia session just hanging out, accumulating. London session sweeping out those lows. So then that means that our New York session, if we accumulated, we're gonna reverse whatever Asia did. Asia traded lower, so we should trade through that, which we did. However, once we get to our actual session to trade, we're all the way up here, and we have two data wicks, data low and data high. So personally, I didn't take any trades. I would have wanted to see one side get taken out, like us trade down, take out this sell side, and then target buy side. However, we just ran. If you wanted to, you could obviously get long into this inversion. You see we invert these two fair value gaps. Very aggressive, very fast. Stop would be right here. And then you could just target this high and then anything else. And personally, we were trading through a lot. It was very high resistance right here, even though it doesn't look like it. Like there was really no telling where price was going to reverse or, go against your position. So I did not enter right there because that's not part of my model. So then finally going into today, you go on the higher time frame. So we're just sitting inside of this weekly fair value gap. So I was expecting price to kind of be halted. Doesn't mean we're gonna just trade straight down, but price is gonna be a little bit bearish. So we have that weekly fair value gap. You can see price is respecting it. Every time we make a new high, we're trading lower, and this is a range. We're in a tight consolidation. So what I'm expecting is we're going to stay within this range, and we should only be trading the external parts of the chart. So let's just say down here, even though we're not trading at this time, but let's just say, for instance, Asia session gets taken out. We identify we're in a range. This is the outermost external liquidity taking out all these lows. We could expect that price is going to push up and take up some of this internal liquidity from external to internal. And then that's going to happen again during our actual session. Let's take a look. So we take out high a day right here. We actually have a decent setup right here, which is our silver bullet. Stop right there, target this low and possibly lower. I'd say this is the better exit. Anyways, we're respecting that. We're taking out high a day. We're on the outermost liquidity. So say like we're trying to take a trade in here. Every time we take a high, there's no sense of urgency. There's no like reason price goes lower because there's not enough liquidity in here. We're just in a range. There's a lot of liquidity up here, so we're gonna get momentum, but there's none in here. So the one trade that I took this week, which was a win, was right here. So I identified that New York session had consolidated. So when New York session consolidates, at least AM session, that's when I'm looking for a PM session silver bullet or potentially a lens trade model. So what I saw was this 5 minute, and I wanted to see it become inverted because I know if this 5 minute gets inverted, these lows become vulnerable. So my initial entry, once we had already traded below that 5 minute, but it wasn't in full effect because we didn't close beneath it, but we're traded beneath it. So I actually entered right here on this 2 minute inversion. So we have 2 stacked fair value gaps, invert them, and then I entered on that touch, and then I'll show you guys where I maintained that entry, how I maintained it. So this is the 2 minute. Obviously this recording is a little bit later because I wasn't expecting to take a trade. Like I woke up, I saw it. I know Fed Powell speaking tomorrow, but this was a very clear setup. So that's when I trade PM session, when it's super clear. Anyways, so what happened right here is I have a 2 minute entry, this square, which was that inversion that I showed you. And then I'm actually adding into my position. So my overall risk right here is 180. 180 to make 680. Okay, so then I'm going to continue this trade, and I'm going to keep adjusting my stop because I'm not trying to increase my risk. I'm trying to increase my size while maintaining the same amount of risk. So come back right here. There we go. We touch it. Again, 180 risk, but we have $1,000 of reward on the other side. That's worth it. That I just made this trade a 1 to 5 RR because of that extra entry. Okay, and then we kind of hang out inside of it. That's fine. I'm not moving my stop super fast because, like I mentioned, Fed Powell is speaking tomorrow, so market's very choppy. Doesn't mean you can't take a trade, but you have to be aware that you're going to have to trade lower size and keep risk on. So let's see. Start displacing through that low. Now I believe I move to break even around here. Looks like I don't, but I probably would, if price did start coming back on me, I would definitely take a break even. So I wanted this full reward. However, I noticed that ES was making SMTs. So we took out all sell side on ES for whatever reason. And then NQ just has a bunch of stacked lows and we actually don't end up hitting them. So I end up prematurely exiting. No issue. I probably lost like 1.5 R. That was a good win at harsh conditions. For the rest of the week, I'm expecting us to actually expand up or down. Honestly, I'm not 100% sure. I'd like to see more buy side. Preferably, we take out, we manipulate some sell side, all those lows that we have on NQ, and then continue up higher. However, only time will tell because it's really going to be based off what Powell speaks about if we're raising or lowering interest rates. Last time he was very hawkish. He didn't want to talk about if they were or weren't. It was always a maybe. Maybe we're going to cut rates, maybe we won't. But other than that, I will be live tomorrow and the next day. So I hope you guys enjoyed the video. You guys have a good one.